Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. This is our midweek podcast, and the star of the show today is going to be Nvidia. We're going to spend some time reviewing the charts, seeing what are the important levels coming up with the earnings announcement tomorrow. In addition to that, we'll cover the ES, bonds, and the NQs. So we'll take a quick whip around. There's been enough
hmm
action this week that it made sense to do a show. So here we are. For the new listeners, my name's Ben Maldonado, and as always, I'm here with my partner Barry Hederachi. Barry, how we doing?
Doing great, doing great.
What does the star of the show, Nvidia, have in store for us?
Well, hopefully profits.
Yes, yeah, that's the
Let's
goal.
see. Yeah, that's the goal. Last couple of times we looked at it as this high was coming in. I believe we talked about this 150 level, and we said, price can't really settle above that. Then we're going to see lower prices. Sure enough, eventually we got down to the 72-degree line, which was
Hmm.
112,
Hmm.
and so basically we've been sort of bracketed in this upper 72-degree square ever since the highs came in. These highs came in, we can't
Sure.
forget it was back in November, right? November, December is when these came in. And this high, I think we talked about a little bit. If you guys want to check on these, you can search the YouTube channel and search for the symbol, I guess, right? That's how you find it.
Yeah, you should be able to
NVIDIA.
find it that way.
Yeah, it'll
Hmm.
be in there. So, I mean, we squared out in November, that's 144 by 144. Then we saw a false break come in, and that gave us a nice ABCD correction to the 50% of the square. Rallied, another false break, back to the 50%, back up to the full square, right through the 50%,
Yeah, gap.
and the full square to the bottom. And now then we rally back up right onto the 216 bars from the low in April. So what does all
Hmm.
that mean? A couple of interesting things for students. I think the true low, I mean the true high came in here, the squared out 145, 144, and it was
Hmm.
also a 90-degree run. You can see 91 here, so 90-degree
Hmm.
run going up into that, and we corrected 90 degrees going into that low. So we had 90 up, 90 down. Okay,
Hmm.
looks fairly normal. So the hard part is, when we finished with that 90, we're back stuck in exactly in the middle of that range, which makes it a little bit more difficult. So what we're going to try to do is take a look at, what are the possibilities, and more importantly, what are the levels we have to watch to see which way the market's going to move. Now, just this is the daily. We're going to go through the daily, calendar day, weekly, and the monthly. So looking at the daily, well, the important thing is we corrected an entire square.
Hmm.
Sure, this is coming off of the April lows, but I picked it because it gave us the 144 square, you know,
Hmm.
and that gave us this big full correction, which essentially it went 72 bars at least and 72 degrees, right?
Hmm.
So I would say the termination of the cycle and somewhat of a correction is in place. So the question is that enough? I think that's what we talked about last time, right? When we talked about
Yeah.
this. And that's when we use level to confirm, well, which way is it more probable? And obviously price pathway is going to tell us that. And here you can see how I think we did a show right before this or somewhere in
Hmm.
here.
Hmm.
And because that 144 has been really good. And I remember this big drop um, going right through the 50%. I don't want to take a lot of time going through all the different highs and lows and make this into too much of an educational, because I think time is short. It's a midweek show, so let's get to the keys here. Based on the daily, we really want to watch the low today. If not the low today, at least you want to note 123. So I would write that down. 123 is a level you want to sort of hold above, okay? And the 50% level is 130. So somewhere between 123 and 130 is the key level we want to watch. Why is that important? Well, because this could be the higher low that we always look for, because we corrected 90 degrees, pretty good, decent correction.
Hmm.
And if that took care of it, not only price, but we did burn decent amount of time here. So if that's the case, if that's a 1, 2, then we have a 3 coming up, but it doesn't have
Hmm.
to be a 3. It could be an A, B, C, D. And I looked at that. If you look at the A, B, C, D, it's let's put it in blue, I suppose, so you can see it, right?
It
So
goes
that
up to
takes,
almost like a false break.
yeah, exactly. It goes right back up into the same highs,
Hmm.
and so that terminates there. So what does all of that look like now? Well, it's starting to look like distribution in a larger scale.
It's funny
Uh,
you say that. I was going to say it's not
mhm.
exactly the same, but it looks a hell of a lot like the NQ pattern.
Well, I'm not surprised, right?
Hmm. Hmm.
So yeah, so that ABCD we want to watch. Where does that target go? Well, it's around 152. Again, you can see how what a difficult time we're having holding about this 144.
Hmm.
No doubt because of the square. We squared out. And if we can do that, let's see what happens. ABCDs might terminate a little early. It doesn't have to get to the target. But this, given the pattern, given the square, this kind of a termination would be another part of it, another nail in the distribution coffin, let's just say, if that's what's
Sure,
happening here.
sure.
And we have to go with that because that's what it looks like, you know?
Hmm.
All right. So that's what's happening on the daily. You guys have the two levels to watch. Now, if we dip a little lower tomorrow, let's say 120, you know, God knows what happens overnight, but somewhere somewhere higher than the previous low, you can still do the ABCD from there, and of course it'll be a little bit lower, right? So
Right.
that's what's going to happen. But so another key level to know, 112 is the 72-degree level, and if we can hold above that, you know, everything's pretty solid, no matter what happens. How much it gyrates here. Holding about 112 is still good. A false break here would be actually very positive, right?
Hmm.
Get everybody screaming going down there and just whip it around. That would work. So that's kind of what I'm seeing here. Now, that's just the short term. We're talking about, if we're talking to ABCD, if it corrects in time, it's just a couple of weeks away. We're not looking at the long term. We're just looking at the next swing, so to speak, right?
Hmm.
Okay, so that's if we hold these and the lows hold. So that's scenario A. B is that we lose the lows, today's low, and we run down to the 72-degree, we lose 112. Well, if that happens, it's in a whole nother story. If we lose today's low by more than a couple of points, then we have work to do. We're not going to snap back so quickly. So keeping that in mind, it seems to me like the pivot is really the low today or this 123 level, and then you definitely want to watch the 130 for the 50% of the square because if we can settle above that, obviously it would mean more upside. And if we get stuck below that somehow, we break lower, rally up, rally, and then we get stuck below that. Not exactly positive. Actually, it's kind of negative. Kind of like here, we broke, rallied
Hmm.
up to 50% and couldn't. Of course,
And
we had a nice,
failed.
yeah,
Yeah.
and failed. Now, once you got up above that, you can see how we stayed above it very nicely. And till now, right? We broke above, came down. So something changed here after we broke. Uh, you know, this section is
Hmm.
different, very different from the other section. So that's why we want to really watch this closely. Are we going to go into new highs after tomorrow? I think the probabilities are very low. Are we going into new lows? Um, that's also low. So I guess what it's going to call for is some kind of a middle way movement. I think we've
Hmm.
done both extremes pretty hard, and we've had enough news and earnings and everything else to shake this down, shake this tree. And after it's all been shaken, we're back at the 50% level. So I don't normally you don't have huge accelerations in sort of a distribution pattern coming off the 50%. Now, if we can get down here, then we have something to work with, right? Because if we can hold above these 112, this area, obviously we can bounce. If we get up here and get stuck, we can certainly sell off. So within the bracket, we have to kind of wait till we settle this 50%. Okay, that's
Hmm.
sort of the tactical view. And I gave you the logic for that. We had the 90 degrees, 90-degree correction, 90 degrees up. We talked about the square, and it
Hmm.
looks like we're correcting in a little bit more in time than price, but that's nothing unusual about that.
Hmm.
Now this is the calendar day. No big deal because I used, we looked at the calendar count or the degree count on the other chart. But here, what I wanted to look at was, what is it looking like from the high? And the high is really interesting because we have a high to high. We did a 45,
Mm-hmm.
and then that high to this last high was 45.
45. Yep.
And the other thing is they've been lower highs, right?
Yes, they
We
have.
ever since the square, sure, it was a while back. We've been making lower highs, and well, not counting the false break, so you look at the bar right next to it, and
Mm-hmm.
we've been making lower lows up until here. So after we made the last lower high, I would say the rest of the leg is in process. So this is the part we have to focus on. So notice the other chart we were looking from coming off of an important low. Matter of fact, this one. And now we're looking at it from the high.
Mm-hmm.
What's that angle like? So looking at it, you can see how the 50% here also played a role, which is 45 degrees down from the high. And I think the way it's looking, the bracket here is 120, 130. 120, 130 is really the bracket here. And if we can hold above 130 somehow, then we can say well, you are higher low in place. Okay. And if we take out 119, 120 at this level, then it just doesn't seem logical that we get to 180. I mean, that's just how
Yeah,
normally
it's
these
gonna,
things trade, right?
yep, it'll go
So
right down there.
that amazingly is 108.
Mm-hmm.
So that's how I'm looking at this. Above 130, we're a little bit stronger, firmer. We can go up and challenge 142. And if we can't really do it, we get through 119, then it looks like 180 is really the completion. And yeah, that's how
Mm-hmm.
that's going to look like. Now, if we take it from 72, what I wanted to show you guys was we did square out on the calendar day basis,
Mm-hmm.
144 by 72. And again, so now wrapping up the last chart and this one, this is why we really want to watch this low here. After we square it out from the high, we have a higher low. So the probabilities are we're going to move away from it. Okay. So
Mm-hmm.
that's why this low is important, that we don't take it out. Again, we talked about some other numbers, but you can see why 119, well, 117, why 117
Mm-hmm.
is important here because this is the 144 down. Why is that important? Why is the 117 important? Because we squared out.
Yeah,
So
it's
that's
nice
a 100.
square.
It's a very good square because look at the bounce. We get square and a half bounce off of that, and now we're kind of in the middle. So
Mm-hmm.
in the middle is mostly what we have to figure out most of the time. Otherwise, everybody would be able to do this, right?
That's correct.
Right? It wouldn't be a challenge. So in the middle is where
Mm-hmm.
we always find ourselves. And so we talked about the previous chart. I hope it was clear here. The whole point here is look, we have a square at the low. We got a good rally off of it. It's at a 1-2, and we talked about the fat. We talk about the fat pitch often. Is the
Mm-hmm.
next one at 3? Well, if that's going to happen, obviously we have to hold the 117.19 level,
Yep.
and we need to somehow settle above the 126, and obviously getting above 130, 135 would be the 72 degrees. But by that time, we've come a long way. But I'm
Yeah.
thinking if we hold these two levels and we are holding above 50% is very positive, especially after earnings.
Mm-hmm.
So we want to see how it behaves in that. The trick here, I think, for most people is we're making lower lows and we're also making, lower highs, and then we're also making higher lows.
Higher lows.
So
Mm-hmm.
it's kind of getting into triangulation. So we want to figure out early on what's happening, and nothing better than treating these as a higher low post square. So we're looking for a move up, and we're confirming it through 126 here, 50% of the square, and as long as we're holding about 117, right? All right,
Very,
that's good,
very
right?
good. Very good
Okay,
levels.
now let's take a look at the weekly. So those, when you look at the daily and the weekly, I mean, it's really a big difference. On
Mm-hmm.
a weekly basis, we did also square out. We have 135 by 112, And the 112 weeks, it's a fractal of the business cycle. There's a lot of things going into the 112.
Hmm.
Not to mention the 45-degree relationship, right? So that was a big deal. So we talked about that 144 square that topped it up, but there's also a weekly square that topped off this leg. And what happened after that all looks pretty familiar. It's kind of expected, right? We had a high come in at the square, mess around for a few bars, false break down, 1 bar correction,
Hmm.
very weak. That's when you want to be short, right? And if you
Hmm.
were lucky enough, boom, boom, you get a couple of weeks down. There's that big whip around that we saw after the gap down. And so it's, you know, I feel like these highs are correcting and it might not be finished yet because as far as the bigger weekly picture goes, sure, we can rally off of here. It doesn't mean we're rallying, sailing off into $200, right?
That's right.
So you want to watch this now. All that talk to say to watch this area, watch the 123. This is a 50% level. We really want to be on top of it if the market is bullish. And if we somehow slip under it, we slipped here, dipped a little below, but there were enough buyers coming in. That's because we squared out at this low. This is what I showed you guys on the daily. We did that 90-degree move. We had a square out. All those things were packed into the daily that finished up the leg in the weekly chart. And so we have an up and a down again. We had that 1 and the 2. So long as we hold here, again, I'm sort of emphasizing this. You want to watch the 123. If we can hold this level, 119 on the other charts, but you can see it's in the same ballpark. If we can hold these levels, then we can obviously go up and check that ABCD that we threw up.
Hmm.
But as we get up higher, 146 area is definitely resistance, no different than how it was treated here earlier. All right, so that's one weekly chart. This is basically the same chart, different scale. You can see the resistance up here around the 146, 147 level, and the 50% of the square, 124, 123, pretty much the same thing. But I saved the best for last, which is the monthly. And here, which takes up the entire screen pretty much, is
Hmm.
the monthly
Beautiful
score,
square.
monthly score out. It's a 2 by 1, basically 144 degrees up in 72 months. So 72 months in Gann's work is no joke. So we ought to treat this with some respect, meaning after 72 months up and we square price and time, 1 bar down is not the end of the story, is kind of
No,
what's happening here.
no.
So looking at the daily, sure, we can get a little bounce. She can get the weekly, sure, we can get a couple of up bars. But what's happening in the bigger picture, right? Is this the kind of market that's going to get right on top of 147 and blast off for another, 50% move higher? I don't think so. And normally when these happen, we get these big squares on a monthly basis. You get big corrections.
And you pay
Yeah,
attention. And
yeah,
Barry,
yeah.
in looking at the weekly and the monthly,
Hmm.
in this case, the monthly went up 2 squares. If we pull back 50%, which is
Yeah,
bullish,
$75. Yeah,
is $75.
yeah, yeah.
Same thing on the
So,
weekly. I think we went up
mm-hmm,
like three
mm-hmm,
squares. If you pull back a square and a half, it's around
yeah.
$75.
Yeah, and for these big corrections, I mean, big moves that score out in like 72 months, 144
Hmm.
months. A 50% correction is normal, healthy kind of a correction. If the
Yep.
market is super, let's say, strong, then maybe we might do a third, you know.
Hmm.
So that's something you want to keep in mind. Yeah, that's kind of it. So what's the whole point of the monthly is that we could certainly go a lot lower. And how would we know that? When we start slipping through the levels that we talked about in the daily and the weekly. That's why those levels are really important. If you guys didn't write it down, just rewind it and take a look at those levels, because
Hmm.
if we can't hold those, you have to in the back of your mind know that this is probably in the works. And the 72-month high is not going to finish off in 1 or 2 bars. I mean, even if it's 3 bars, you still have another whole month to go, and a lot can happen in a month, especially after a run like this.
And
So,
the thing also, Barry, and people need to understand this. When you get a square out like this on a monthly, what that means is what came before has ended.
mhm,
It doesn't mean there's a crash on the other side or we know exactly what's going to happen, but the
right.
move that you saw is over.
Mhm.
So the character change is going to be there. So to expect a melt up to continue is not likely. I mean, is it
No, it's
possible? Of course, but
no.
it's not probable because the
Yeah,
cycle ended there.
yeah, yeah. I mean, you have to. Otherwise, this whole theory can be just thrown in the trash if if that were the
Right.
case.
Right.
So, I
Right.
mean, and the one by one is still way down here. So we can get down to 100. We talked about 75 being, 50% correction. So we don't have to
Hmm.
be at 75. We can be, we can come down
What's
to
that,
the
like
one by one.
85, 90?
Yeah, 90, 93, 94,
Hmm. Hmm.
and still well above the one by one all the way to June. Right?
Right.
So there's plenty of space to correct and still be in a hell of a trajectory. So
Sure.
we're well above the one by one. So that's
Right.
the thing to keep in mind, meaning there's a lot of downside to be had because of the monthly square out. And we saw the other daily, all the little indications that this is how we got the nail to high as it came in because we saw all the daily and the weekly cycles. It wasn't just the ones we just talked about. There were other ones.
Hmm.
I think the original video, the second video has all of them or most of them.
Right.
So once they come in, we want to track it. Well, did we go higher since then? Well, we haven't. Have we gone lower since then? Well, we have. Well, okay. That means the cycle has some traction and we're just burning up price and time. And now you guys see if we start, so the whole point is if we start slipping those levels, start not be able to get traction on those levels, this could be unfolding. So stay tuned. I mean, we'll cover it every couple of weeks or so,
Sure.
but you guys have the basics. 147 is a level to really get above and hold above to go higher. Otherwise, I mean, obviously there'll be a dip to buy. So the next job is to figure out, well, where is that low going to come in?
Hmm.
And for now, I showed you the only one that we had because we came down, we squared out, and if that low holds, we can get a little bounce. We can get a little bounce off of here. But does that end the stuff we saw on the monthly? No. So we had to play this carefully. And the biggest thing here is that the cycles have really shifted here. And Ben, I know you talked about this in Dale's show, probably, right? How
Yeah.
things have changed. It's not the same. And I think that's also my point. It's not the same. So we have to take this side of the cycle, meaning after the highs came in, we have to take this in a different light than all this easy money and let's just buy, right? So I think that part of it's over now. And we have to be a little bit more cautious. If you don't know that, then you're going to give a lot of it back, just like they say in the books. So,
And it's what you said at the end of our last weekly show, which is, the focus now becomes the counter trends, right?
exactly.
What's the character of a counter trend now? Does it create a lower high? Does it fail at resistance?
Hmm.
That's the sort of thing you gotta try and notice now,
Right.
as opposed to, do you wait for support, buy the dip and just let it rip again?
Hmm. So the case for the upside is because we did square out, we have a higher low in place. Sure, why not? And the levels we talked about will help you sort of, pave the way. And that's really it. Um, Anything to add or you got any questions,
No,
Ben,
I think
about
that's
the way?
that's great
Yeah.
coverage, good perspective on multi time frames.
So short term, we could be
We can
bullish.
rally.
Yeah,
Yeah.
we can rally if we hold the numbers. Long term, doesn't matter how much we hold the numbers. It looks kind of bearish. If not bearish, if not a 50% correction, maybe a one third, maybe 50% of the square. Get us
Hmm.
down to that 111, 112 level. But that
Hmm.
seems a little low for 72 months. You know what I mean?
Yeah.
Gann wouldn't go for that. So
No, no, no.
so let's see. Let's see what happened. That's what I'm seeing. So we'll put it out there. And so far, analysis have been pretty much on. So
Very good. What about the ES and the S&P? What
yeah,
is what has
well,
Monday, Tuesday done to our outlook?
well, if you guys caught the Friday show from last Friday, uh, it pretty much worked out the way we were looking at it. We talked about 60-20 being the key level to watch. Sure enough, here's the cash. We really couldn't, we couldn't really get above it. And guess
Mm-hmm.
what happened? Guess what we're moving towards? This 58-48, right?
Mm-hmm.
Now, then I drew this trend line. I said, well, we lost this trend line. We have one left. Now, if we manage to hold this and rally a little bit, are we going to get into new highs? I doubt it,
No,
especially
you got to
after.
watch 60-20 now. See if we get stuck under.
Yeah, but basically at this point we have to take a stance, and we talked about why and the probabilities in the last few videos. So at this point, we held the trend line, sure, let it go bounce a little bit. Let's see what happens on the next counter trend. So we come back to the counter trends, right? So if we're gonna
Exactly.
treat this as if the highs are in, then we really have to look at the counter trend to see how it's working. And so far, it's been okay because we've been going all the way to max. Every time you get to run up, all the way up to the high. So it's been kind of easy in that sense.
Mm-hmm.
And the lows, what's happened since the false break is that we just made a new lower low compared to the last
Yep.
swing low, right?
Yep.
So
Yep.
that's happening. And we have really good support at 57.50, 58.48. So cash. Not all things go straight down. So let's watch it. Like you said, Ben, I think 60-20 is the one to watch
Mm-hmm.
very closely because that's a kind of a big deal. Let's see what else we have. So here is the other interesting chart. I really like watching the front month
Mm-hmm.
because especially if the high and lows are, not on this side of the switch rollover, it's a much better number. So here you can see it 90 up has been sort of the support level ever since October, right? So October we came up to the 90, messed around a little bit, broke the triangle to the downside, held above structural support, ran back up above, held above the 90, ran up to the 50%, really couldn't do it. So we've been kind of in the same distribution sort of pattern that we
Mm-hmm.
saw earlier. But the key is if you can kind of eyeball that, you can see we held here, held here, held here, held there, and ever since the new year, we've been holding above this 90. So clearly, this we can get a little bit of bounce factor coming off this 90. So and if we lose, for example, if we lose the lows of today, you see where we are. It's not just not any low. We're at that 90 level. So if we slip
Yeah.
there, we're definitely going to go lower. And at this point, if we go lower, we're going to go much lower. So that might end up becoming, down at the 50% level where
What
we have
price is
structural
your 90
support.
there? What price is your
Well,
90?
90, this is the futures. It's 57.59.
No, up at the 90.
Oh, at the 90 here. Right.
Yeah. Yeah.
That's 59.40.
Okay.
Good.
That's key right
Yeah,
now.
that's it. So time is short. I just wanted to give you guys a quick sort of a tour on that. You have the weekend show, so a lot more detail there.
Mm-hmm.
Here, well, the bonds, finally broke out. Again, we spent a lot of time on the weekend show on bonds. The last couple of shows, we talked about, how the low came in and we're looking for a rally, and 45-degree level was really sort of the resistance, and we were wondering if it could get through it. And there was a case to be made for going higher, right? So that's why we put the ABCD a couple of weeks ago,
Mm-hmm. Mm-hmm.
and we were both laughing how it ended up at 19 and a half. So or 1916. So that's kind of where it looks like it's going. For in order to do that, we have to hold about 16-14. If we can do that, then I think bonds could push higher up into the ABCD, and that would be great to see it up there.
Mm-hmm.
Um, that's it. And crude's going lower. Kind of expected because we lost 73.50. The next stop is 64.75 or structural support here, which is pretty much exactly around 68, 69. We talked about that a couple of weeks ago also. Let me put it back to you so we can cover the Nasdaq and
Cover the
yep,
NQs.
and Qs.
We're going to do this quickly, but
Mm-hmm.
because we covered it on the weekend show, 21,366 was the key number. There's Monday's low right on the full square,
Yep.
but today it just gave it up.
Mm-hmm.
So key thing is we're going to watch counter trends. Do we get stuck under here? And remember, we don't have a higher high here. We have a lower high.
Right.
So
Hmm.
this is vulnerable right now. The key number is 21,366 on bounces, 20,642 on the downside. And just like you were saying with the ES, if we get down here, we're going much lower because that'll give us a
Right.
lower low as well.
Right.
So
So, I mean, looking at this, you can see how important the next counter trend is going to be.
huge,
Yeah. Yep.
really, really big. Let's quickly take a look at some of the other ones. Weekly, the low is on major support,
Hmm.
both trend line and the 50% of the square. So if we take out these lows, we're going much lower. I mean, it opens
That's
up.
a one by one, right? That
Yeah,
trend line.
that is a one by one.
So Nasdaq breaking a weekly one by one. That's a big deal if we take
Yeah.
that out.
And
21.
that's off the August low, which is a good
Right.
low.
Hmm.
Monthly basis, same thing, man. We're dancing right at the 50% of the square.
Mm-hmm.
You know, if we push down the last couple of days and then start the bar next month and get stuck under, again, it opens up 18,000.
Is that
I wanted to
270 bars at the high?
absolutely from the
270 months, right?
270 months from the 2002 lows.
Goodness.
I mean, that's a
Yeah.
big square.
Yeah. Yeah. It's
And
hard to
last,
forget the 270-month run. This is why the memory is always about just buying the dip. You never forget that.
right, because look how long
Yeah.
it worked.
Yeah.
It's worked for
Yeah.
270 months.
Exactly.
So let's see.
Hmm.
Last thing I'll show you is the calendar day because this is a good one. Look at where support came in right on that one by one.
Yeah. Yeah.
But this is shown, all along here we got stuck under, then we bounced around, we pushed up, and then this turned out to be just a little false break with this,
Hmm.
right?
Hmm.
Just pushed up for 3 or 4 days and then gave it up.
Yeah. I think the counter trends are going to be the key here.
Yes. We want to see, do they get stuck under? If they do, then it's, both barrels, right? Hit them with both barrels.
Yeah. And we both
So
post during the week, so you guys can keep up with the charts and the levels, right?
absolutely. So this is a quick run around. We just wanted to give you Nvidia is the big thing everyone's focused on for earnings tomorrow after the close. So we wanted to give you the levels and the key things to watch there. And
And tell
it's
you which
sort of
calls to buy.
all right. So it's kind of playing out as we've been discussing, right?
Mhm.
There's no guarantees, it's just probabilities. And so now
Right.
we want to watch, as Barry said, we want to focus on these counter trends, see if they get stuck under important levels. If they do, it's a really low risk spot to trade when you get that.
Yeah.
Same thing on the bullish side, right? When something's bullish and you get that counter trend that pulls back, that's a low risk way to play. And that's the kind
Absolutely.
of
Absolutely.
setups we look for. So
And the thing here with the monthly chart is to know that we are at a high place, and you saw it 270 months on the other chart that you pulled up,
mhm.
and then you put that in with sort of the squares that we saw on that 72-month run. So these are we're at a big high. This is not just some spot. And
No,
so I
no.
think you got to play a little bit carefully here.
Yeah. So we'll let it play out. We don't have to
Mhm.
predict. We just
Yeah.
go with the levels. You have the levels on Nvidia. Watch it.
Yep.
If you see a decent setup at one of the levels, then you can take your shots.
Yep.
So anyway, we'll talk to you on Friday. We appreciate you guys subscribing, liking, sharing the links with your friends as the channel continues to grow. And buckle up because things are going to continue to be volatile, which is great for traders. So good
Yep.
job, Barry. Awesome analysis on the video. Let's hope it helps everybody, and we'll talk to you all on the weekend.
All right. Thanks, Ben. We'll see you soon. See you Friday. All right.
Take
Have a good
care.
week, guys. All right. Bye-bye.
Bye.